Welcome, and here we're looking at the S&P 500 on the 4-hour chart, and look, essentially the 1772 is still the resistance. If it becomes the support, then we can look to the upside. We just need to be a little bit mindful because this wave 4 here that we're looking at may not be finished. This can be the A wave, the B wave in 3 waves, and then the C wave in 5 waves here to complete wave 4, and then we could move up from this point. So that's the real option. But what we've got here labelled as wave 4 is a real option as well, with a 5-wave structure heading higher through here. And the reason for that for me is twofold. Firstly is that the market has made an effort to get back into group 2, the 1765 here. And secondly, not on the futures market, but on the cash market, the Dow Jones has made a new high here over this previous high here. So just drilling into that a little bit through here, these are the 2 wave counts. We can see that, you know, if this wave 4 is here, then we'll label this up as 1 and back for 2 here, and then this is a building impulse wave to the upside. The flip side of that is that obviously this would be the A wave, the B wave to here in a reasonable sort of 3 waves, you know, and then we would get this situation occurring here, taking out stops and so forth, and then moving up through here. But as I mentioned, look, the Dow Jones has taken this out on the cash, but not the futures. So the futures is lagging, where the futures is normally like well, it leads the price, the future price. So it's important in that regard. So look, all I can say is that we just need to tread lightly. But if we find support on the the 1770 area there, then it's further to the upside. And you can see this on the Dow Jones. We pointed out the other day that the Dow was stronger than the S&P, and we were looking for a long trade off the 1560 and adding on the 15630 there. The 15729 here, or the 15720 as I call it, plus the old high here, you're obviously going to see some sort of corrective pattern, off this old high here in one way or another before finding support here and moving up to 15.8 here, if that's going to be the case. So this can quite easily be the A, the B and the C wave through here. So we'll see how we go there. But as I mentioned, the cash market has taken out the high here, so that that's a positive thing, and we need to trade what we see. So finding support is part of that trade setup. The European markets, the FTSE here, we were also looking at this as an ABC wave as well, through here as a wave 4, the A wave, the B wave here, and the C wave here in quite a nice little 5-wave price action in here, as I can say. Now, this move up through here, as you can see, looks very much like in 3 waves. So this 3-wave structure through here, is corrective in nature, and that would looking at that would see this market move lower from here in terms of moving down through here. But when I look at the cash market, this move up through here doesn't appear to be in 3 waves at all. It appears to be in 5 waves, with this as an A and a B and a C. So it can come back to this sort of area through here and push up from here. That's what I'm kind of expecting. But if wrong, this 6720, the 72 number here, that as resistance, or really even the 6730 as resistance, would have to be tested though. Has to get under there and then break lower from that point, and you can add into this point here. Fair enough, it can be from that point, but just to give this enough time to find support on the 6730 to 20 there. Just give it a bit of time, because it could push up from there in line with the Dow. The Australian market, just sort of want to go back over here a little bit. You know that I've been sort of harping on about this like 4th wave coming through here. Let's just have a look on the cash market here for a moment. The XJO here, it's it's more in perspective when we look at it on the daily bar here. We can see that, you know, this whole price action through here it is corrective, because you can see that it's in you can see it's in overlapping wave structures. But also what makes it interesting as well is that, you know, when we're looking at this through here, the volume has been diminishing through here. This strong bar here, you know, is supporting it from down here. And yesterday, obviously, a typical Wednesday bar where it opens, trades lower, and then closes higher for the day, and on strong volume as well. So that's a real, you know, positive side. And we've seen CBA and BHP with strong volume in them pushing up as well. As expected, we're both long on both of those stocks. Look, we expect this to, you know, to push higher. So it's just a matter of working out the wave count. So this high here should be taken out, and we're looking at 5.5, as you know. And you also know that the 54.50 is the resistance as well. So this is 54.33 at the moment. So it's not like this is much higher here either at the moment. So we're calling this in as I'm looking at the best way I can label all of this is a triangle pattern where each move in each leg, it's a 5-wave structure as an A, B, C, D, and E, and each structure has got 3 waves in it. This doesn't look like it's got 3 waves in it, but it probably has. This has got the 3 in it. This has got an obvious 3 in it. This has got an obvious 3 in it. So it works quite well. And what we're sort of seeing now is we're seeing, we're also seeing 3 waves up here as well, which is a little bit annoying, really. We can see that's the major, you know, they're the major swings there, aren't they? But as an impulse wave, we can also count 1, 2, 3 to here, then A, B, and C for the 4th here. It didn't quite overlap this structure here, so it did a little bit, of course, but it's kind of okay. And then this would be the 5th wave up through here in 5 waves here. So look, it's not really that chirpy, but the positive things is that we are seeing 5-wave structures to the upside, and we're seeing corrective waves to the downside. So in its internal structure, it is pointing up. Secondly, this 54.30 is important, but as I just mentioned, we've got 5-wave structure here. So after 5 waves, we get an A and a B and a C, don't we? So we could see this coming back into the pivot here of 54. Well, in this area here somewhere, and Thursday being a bear day, it would probably, you know, it's okay for it to do that. As long as if it does move down, being on lower volume would confirm that we would see the Friday and the Monday cycle push to the upside. So what we also have been looking for is we've been looking for the top of group 1 here to become the support. It could never really do it. It's traded above it, but it couldn't do it. And now it's traded above it, and we've got our first support here. I just think there may be this little structure here to go today before we push up. I could be wrong, and we could push straight up through here. If that's the case, then you would go long on the closest largest number, and that would be 54.40. So you'd want support, or, you know, we want some sort of break above that, and then look to add on the 54.50 here as well. The momentum of BHP, the US BHP was up overnight, so we should see a bit of movement from that point. On the weak side, we have seen metals move lower, but we've seen oil have a bounce as well off the 93. So let's have a look at those. Okay, starting with the gold market. We're kind of figuring that we've got a possible triangle in here, and I'll just come back to this chart in a moment. Whoops, I better straighten this one up. Okay, so what we're kind of thinking here so far, we know that we're in a corrective pattern across here in terms, so from wave 3 here, we've got 3 waves here, so that's why we know the rest of this is corrective. So we're thinking it's a possible triangle, but it may be more simple than that as well. So a triangle would be an A wave, a B wave, a C wave, down for a D wave, then back up for an E wave as wave 4 and completing, and then wave 5 down for wave 1 here, and then would be looking for an ABC back up in wave 2 there. So that would bring in this little picture here. So this would be the A wave to here, the B wave to here, the C wave to here, and then this three-wave structure, the D wave, the E wave, and then down through to here. So, and then we'd get our bounce back up here for wave 2, and this is where we're looking for a short trade up here, okay? Now, in this structure here also, we could also view this as an ABC structure, as an A wave to here, a B wave to here, and a C wave into here, or I think it's just got one more push to here, and then we would move down from here. In both cases, this move down through, both of them would move basically back down through here. So as the price is at 317 at the moment, so if we just go back into this intraday a little bit through here, and look at this little pattern in through here somewhat here. The reason I thought there might be one more little high here is because of this, in terms of counting the structure to the upside. I can see wave, say an A wave to here, and then, well, I suppose you could go to, well, I would go to here so an A wave to here, a B wave to here, and then the C wave would be in 5 waves, which would be 1, 2. And we can see we've got the strong third wave here in 5 waves, so that would be the third wave. This can be the 4th wave here, and we can have one more 5th wave here, okay, before we see a downside. Now, if I'm wrong there, then we would take it from the closest largest number, which would be the 15 here, the 15 here. If that became the retested resistance here, then you'd know that you're on this track going down through here. So look, there's no trade here yet. It's just sort of splitting hairs really. So we just need to allow that to unfold. The other interesting thing too is that obviously with the metals, there's other metal markets as well. So lining those guys up is important as well. But the silver market is a little bit different. This is just the hourly chart here, and we've been counting 5 waves down from this last high through here, and we could see that it was slowing down through here. So we were looking for a bounce yesterday. We're looking for support on the 2172 number and a possible retest of the 22. Now that's come into play. So we've got this wave 1 here, and I could label this as the A, the B, and the C here as wave 2 here, and that could possibly be the case. But if the gold market is going back to gold here, if the gold market has still got all these possible counts through here, with it coming down and up and mucking around in group 1 here from 1300 to 10, 20 and 30, all of group 1 here, if it's going to be mucking around further sideways through here, then silver, even though it's got a slightly different count, it would also be traveling through this little section here sideways as well. So I thought the best count would be to label this as an A wave to here, a B wave into here, coming and finding support in here, and then a C wave up through to this area here, or possibly even more complicated, why gold's sort of traveling sideways. So yeah, let's just sort of work with that. I guess if the 72 becomes the retested resistance, you can look for a short trade, especially on the 2165 area through here as well. But as you can see, there is a lot of support, in this zone here. So we haven't had a bounce back yet. So even if it did come down further, it would have to expect a bounce back up. So I just think that this area could get a little bit more complicated first. So be a bit careful about that. And also the copper market as well. We've been looking at it being in bearish mode, as you know, and we can see we've got this 5-wave structure coming down through here now, and but once this finds its low in here, we'd need to look at 5 waves in this structure through here. It will slow down in through here, but then it will go back and it will retest this first block of supply here, sellers, in here, or people that have gone long in here and wish to sell when this comes back up through to here, adding pressure to here. So basically we're looking at a 5-wave structure to the downside, and then we'll be looking for 3 waves up. So that it's still sort of in bearish mode. But also I'm mindful too in the bigger picture that that this here, even though I've got it labeled 1, can be an A wave, a B wave and a C wave finishing here, and we can move up from here. And I've mentioned this before, so whatever occurs in this structure here will be really important. So perhaps the 325 is support on this supply area through here. If we get a really nice support here, then we'll look to go long from here. This affects BHP, of course, and the others, and they're all looking pretty chirpy to the upside. This is BHP here, and what I sort of wanted to point out here is that this appears to be a 4th wave in here, nice strong 3rd wave in the middle here. So this would be a 5th wave here, so we'd be looking for a little 5-wave structure up into this area through here. It could travel further, it may be sort of shorter here. I'd have to look on the intraday, but we'll continue to look at the volume, and we'll continue to move stops up here and capture this move through here, because we've been long at the 35 mark down through here. So and we've changed it to a weekly robo. So we're trying to capture the trend, and obviously this is a correction at the minor trading level here at 38. So we've got the arrival, the reaction, and the first high above the level. So then after that we would be looking at this sort of ABC sort of thing, pulling back. Well, the 50-60% retracement level through here is back into this area here, but 36.50 is something that we'd be looking at, and 37.20 is something that we'd be looking at as well. So yeah, let's just see how that goes from this point here. Okay, so the oil market, we were looking and tracking. It's just bigger picture. We're looking at a 5-wave structure coming to the downside through here and getting a bounce off the 95, off the 93, the top of group 1, and that's the case. So we'll be looking at a corrective rally now. The 96.50 is a really important point here that would need to be looking at, and what you need to do is have a look at this intraday and start counting 5 waves up. So we've got 1 and 2 there, and this will be the 3rd wave up. There'll be a 4th, and there'll be a 5th, then there'll be a little ABC correction across here, which will be the 95. So in a particular way, we're looking for support on the 95, which would be so the 1, the 2, the 3, the 4, the 5, then the A, the B and the C back here, and then pushing up from that point there. So looking for a corrective pattern across the 95. I don't know if I've got anything in here. Okay, well this is a bit better here, isn't it? So we can move that there now. We can place that wave 5 in here. So we've got this as a nice little 5-wave structure, and we've got little ABC at the 94 here, and then we've got the strong 3rd wave up here. So we're looking at the ABC here now then, aren't we? So I'm not kind of sure what will happen, but you can only just go to the sort of the obvious, and which would be something of this here as such. So anyway, looking for some sort of corrective pattern there. So allow that to unfold, and then look for support on 95, and then look up to, well, all the levels to the upside. But 96.50 is something that we'd be looking at. But if this was going to be a 5-wave structure up here, then the length of this wave here would be what we would be looking for over here, roughly. So you can line that up. Right, the grains. This is corn here, and we're looking at our next target of 420. So that's been collected now. If the 420 becomes the retested resistance, then we'll be looking at this number here. In fact, we'll be looking at this number anyway, because once the 450 becomes the retested resistance, then we're looking at the 400, which is the next largest number. It's just that we've got this is all group 1 here, 410, 420, somewhere in there, 430 here. So this is all coming into group one. So it can get bouncy here now. Well, you can see the first bounce off here. So we can expect a bounce here. And we've probably got a little 5-wave structure coming in through here. So looking for support, covering any shorts at 420. If you're going to stay short, then keep the stop above the 430 there at 433 or something, and allow all this to bounce out, which is fine, you know. Yes, I mean, I can't. This is the intraday corner here. I can't read all of this here. It's just sort of pointless, really. But the point is that the main trend is down. We could get to see some support in this area at the 420. That's the main thing. If we see it as a retested resistance, so, you know, coming down there and, you know, basically trying to retest the supply through here, you know, just basically some way getting locked under there. As soon as you see that, then you can start, you know, feeding positions in. So also adding under the 18 and the 15 here would be the important thing. So the Fibonacci numbers that we use, 1, 2, 3, 5 and 8. So 8, 5 and then down to 3, that point. The beans, the soybean market, you know, I'm still I'm a bit of an optimist. I'm ever sort of hopeful in a way that that we may find support on the 1300 here again, in terms of the larger picture here being an A wave, and then 1, 2, 3, 4 and 5 finishing in here somewhere, and then moving back up into this area. I'm still a bit hopeful about that, but I'm also not silly. I can see that, you know, we are in a downtrend, and you know, and we're below the closest largest number. Then the next smallest number is the 1250 here. So this is the real sort of line in the sand, if you like. So if this market got above the 1272 there, we would be going along from that point there and looking to add on to these here. But at the meantime, it's sitting on here, and yeah. So we were talking about a 5-wave structure yesterday, or the other day. So the 1, the 2, the 3, the 4 and the 5. So that looks kind of settled. So, you know, we could get an impulse wave up through here, but it would have to get back into group 2 here, the 65, the 72 and the 80 here, and preferably finding support on here before we change our mind. We need to see this block of supply here chipped away at before we can call that in. No point. Most people lose. No point in buying on the bottom or selling at the tops. You can do, but that's where most money is lost in the first 10% of the move, as they say. The wheat market is also. This is just the 1 hour chart here. Sorry, I haven't labelled this. But the main point here is that from the failing of 660, we're looking at the 650 here being the next support here. But I always find when trading is, well, trading short, I'll just trade into the 3 here. 3 is always group 1, so 51, 52 and 53. I like to cover at 53 because I know that orders are sitting at 3, 2 and 1. It gets choppy and it's time consuming, and it simply takes up your time where you could spend that time looking for better signals and set up somewhere else. So trading to that 3 is good. Yeah, anyway, story done. Let's have a look at FX. Starting with the US dollar through here, and the wave 4 that we thought may have been finished is not finished, but it appears to be finished now in that 3-wave structure coming down, the A, the B and the C for wave 4. And originally we were looking at 80.44 for the 38.2 retracement level, and that's come in pretty much sort of spot on there in the current low here. So that's all good. And yeah, if that's the case, then we'll be looking at 5 waves moving to the upside, somewhere into the group 1 area through here of the 10, 20 and the 30. And then from that point we would see a larger ABC correction. So that would be this whole move up through here would be a 5-wave structure, which would be either the A wave or wave 1, and then we'd see a wave 2 come into play, which technically would pull back the 50 or 60%, but let's just see if it's strong, which we think it is. Then we'll see a very shallow retracement area, and this would obviously be the supporting area through here. So we can confirm this once the market gets back into the group 2 area through here. So even if you can get on to 65, 80, 65, that would be a start. But as you know, it would be the 72, the balance line there, that would really be looking for. And that would also be an indication to short the euro as well in it, because it would be finishing its wave 4 rally as a mirror opposite, wouldn't it? So looking at that here, this would be it here, the A, the B and the C for wave 4 here. The 38.2 retracement level is much higher at 130, 135, 83, 84 area through here. And there may be one more little push up here, but looking at the US the dollar, the US dollar index, it doesn't seem to be the case. So, and we know that the euro has shallow retracement, so we need to accommodate that and not wait for it to be perfect as such. So we would, if we're on the right track, then I think we are. So then we would be looking at a 5-wave structure to the downside here, and would be looking around the 134, the 34 being a Fibonacci number. So a great target to look at as well. In terms of trading this though, we'd be looking at the 135 as a retested resistance. So all of that block of support there, we would want to see that as resistance there, and then you can look to short down through to here and counting the 5 waves down. Of course, the 134.50, the old sort of low area through here, is going to create a bounce here. So you will need to see if you want to accommodate that bounce, which should be a 30-40% bounce. Well, maybe even lower, because we're not getting the 40% bounce here. So we could look at a bounce of around 30% or 25 to 30% bounce off the 34.50. If you're going to cover your shorts into these old lows here, then the 134.53 area or the 55 would be a good choice there. Right, the Australian dollar. Look, we're on track here, and the idea was to go, to scale in long above the 95 here yesterday. So if you're doing that, well, then that's great. What we do need for further upside though is we do need the 95.30, which is basically this line through here, the top of group 1 here, to be the support. Okay, so, and it does look like the case, because that little pattern through here is in 3 waves, isn't it? Well, it makes it 3 waves when this guy here, this leg here, can push up through here and take out the low of this one here. That's what creates that 3-wave structure there. So bit of a reoccurring pattern from this little story here as well, but this one's larger, so it means that the market is expanding to the upside. If we can just drill in here a little bit. So yeah, okay, here we go. So yeah, so if you're long, you can pretty much put the stop at 95.06 or something, or if you want to keep it under here, that's fine as well. Let's just see the good old faithful trend line. Yeah, just keep it under that. But what you're looking for here, if the 95.30 becomes the support, then you can look to add on that. But be a little bit careful. It's good to see the pivot, the 95.20 gain some support here. That's quite hopeful. But this sharp move down may be in 5 waves. So this could be a 3-wave counter trend here, failing at the 95.25 area. If the 25 becomes the support, then you'll know you'll get to the 30. So that would be promising as well, but you need that there. Look, it just depends on the degree of structure that you're trading. If you took the long trade here yesterday above, scaling in through getting 3 positions in through here, then that's fine. you shouldn't have gotten the third position in here until this becomes support. Normally what you do as well, if you're a really short-term trader, is you just build the trade in and get out at the top of group one, and then sit back and wait for support. And if you get support, then move in, and that's what you'd be doing now. And if we do get support here, then we can, well, be assured, well, reasonably assured in the high 90% that we'll get to the 95.50 area through here. So yeah, alrighty, well, that's it. So yes, I don't have a really clear wave count on this, so we've just got to be a little bit mindful. But we are seeing 5 wave structures to the upside, so it is positive, and all the lows here are higher lows. So we are in a trend. So just maybe stay above this trend line through here, or stay above the 95 through here. All right. Okay. Cheers.